So overall cash flow statement can be prepared using direct method or indirect method that we have discussed so far. In direct method, we discussed that cash flow from operating activities directly includes receipts from customer, payment to supplier, payment to employees, payment for other operating expenses, payment for interest, payment for income tax. Investing activities and financing activities we discussed are same in both, that is indirect method and direct method. But in direct method or indirect method, the difference is of format of cash flow from operations. So in direct method, cash flow from operation starts with inflows and goes on to subtracting outflows, while in indirect method you start with net income and then you make adjustments to net income to arrive at cash flow number. Both should give you the same answer anyway. So when we are using indirect method, what are the adjustments? We start with net income. We add any non-cash expenses. Why? Because non-cash expenses are not cash outflows. So in order to get the cash figure, we adjust for this by adding the non-cash expenses. We subtract non-cash incomes, and then the next is that we make adjustments for working capital. Adjustment for working capital includes subtracting any increase in current assets, adding any decrease in current assets, adding any increase in current liabilities, and subtracting any decrease in current liabilities. So that's how we arrive at the net cash provided by operating activities. That is starting with net income, adjusting for non-cash items, and then adjusting for balance sheet changes, that is current asset or current liability changes. That is subtract increase in current asset, add decrease in current asset, add increase in current liability, and subtract decrease in current liability. So this is how you arrive at the net cash provided by operating activities, and you only take operational items into account like depreciation expense, gain on sale of equipment, account receivable, inventory, prepaid expenses, account payable, wage payable, interest payable, income tax payable, other accrued liabilities. Investment items would go to investing activities and financing would go to financing. Only the operational items would fall in here in cash flow from operating activities. Generally, you will see income tax and interest payable also being recorded in operating activities or operational cash flows. So here is a question for you to do. Based on the following information, what are the total adjustments that company would make to net income in order to drive operating cash flow? So what are the adjustments that need to be made to net income in order to get the cash flow? The correct answer is A. So simply speaking, what you do is that you make adjustments for, you start with net income and then you make adjustment for non-cash item. That is, you add non-cash expense, then you subtract non-cash incomes, and then you adjust for working capital changes. That is, you add for increase in current liabilities and you subtract increase in current assets, and then you subtract decrease in current liabilities and you add decrease in current assets. So this is the format that you will need to use. So what is the non-cash expense here? Depreciation. So that it is an expense, so you will add it. So add 7. Then balance sheet item, account receivable. Account receivable has increased. So increase in current asset, account receivable is current asset and current asset has increased. So increase in current asset should be subtracted. That is 15 million. Inventory is again a current asset, but it has decreased. So decrease in current assets need to be added. So 3 million. Accounts payable is a current liability. Current liability has increased and increase in current liability is added. That is 10 million. So 10 plus 7, 17 minus 15, 2 plus 3, 5. So 5 million is your answer. That is, you will add 5 million to net income to arrive at the cash flow from operation. So your cash flow from operation will be 30 plus 5, 35. 35 will be your cash flow from operation, and this adjustment figure that you need to arrive at cash flow from operations is 5 million.